Good morning, everyone. I trust all of you would have received and gone through the earnings presentation that has been circulated earlier. Let me begin by sharing key developments at Globus Spirits, while Mr. Rekhi will brief you on the developments in Unibev, our premium IMFL business. Dr. Bhaskar Roy will thereafter brief you on the operational performance. Our CFO, Rajay Goyal, will take you through the financial highlights for the quarter ended March 2018. The previous financial year, our top line grew by 25%, while EBITDA margins remained stable. The lack of revenue from our Bihar plant has been a drain on PAT as the debt service and depreciation weighs down profitability. Our West Bengal facility scaled up well, performing at 90% plus capacity utilization levels. We started making inroads into the West Bengal IMIL market and are seeing good traction for our brand Goldie. At 33 million cases per year, West Bengal is one of the largest IMIL states in the country and growing rapidly. With our backward integrated, highly efficient operations, we have an advantage over most of the existing players who rely on ENA procurement for IMIL. Over 75% of the market shared between companies are bottling plants only. We are expanding our footprint in the state and are focusing on profitable brand building to drive market share. Our Rajasthan IMIL business continued to deliver good performance during the year as we increased our market share from 29% to over 32%, becoming the largest player in Rajasthan. Currently, our captive consumption of bulk alcohol is 45%, which is expected to further increase with growth in IMIL volumes and with further strengthening of our franchise bottling operations. This, along with our continuous focus on productivity, will aid margin improvement in the long term. Going forward, the company's greatest IMIL growth opportunities lie in West Bengal and Haryana, where our market shares are currently the lowest in the company. On the bulk business, I'm happy to inform that we are starting the current financial year with some positive developments. Bihar government, upon orders of the High Court, has permitted manufacturing of ENA in the state, implying that we can now recommence our plant and export ENA out of the states and also out of the country. The closure of the Bihar plant seriously impacted our financial performance in the year gone by, and we hope that with recommencement of operations in the current year, some of this stress is reduced. We are currently evaluating market opportunities available to us from the Bihar plant and will accordingly restart operations over the course of the financial year. The biofuel policy was approved by the cabinet just earlier this month, allowed ethanol manufacturing from various grades. Hitherto, ethanol manufactured from molasses was exclusively purchased for fuel blending. This change in policy has opened new doors for us and comes just at the time that we've received permission to restart Bihar. While it is still early days, this will present a very good opportunities for grain distilleries in the future. In the last year, out of a total demand of over 300 crore litres, OMCs were only able to procure around 150 crore litres for their fuel ethanol mandate. I am also happy to announce that we have received much-awaited price hike in IMIL in Rajasthan. The increase on a blended basis is rupees 31 per case, a large part of which will percolate to profits, providing immediate profitability trigger. Lastly, I just want to briefly touch upon the Unibev business. This premium IMFL venture is an integral part of a 360-degree business model, and we will be adopting a phased approach in this business for both launch of brands and for geographic expansion. The strategy is to allocate free cash flow from Globus's IMIL and distillery operations into IMFL and ramp up as soon as there is proof of concept. I would now like to request Mr. Rekhi to give an update on Unibev's operations in the year gone by.
Good morning, everybody. In December 2017, that is the last year, we launched our first premium IMFL product from the stable of Unibev. This is a premium brandy called L'Affaire, which in French means business, in the state of Pondicherry. The initial response has been extremely encouraging. The product has been very well received by the customers and the channel partners. Both the blend and the packaging have been highly appreciated by consumers and trade alike. We will be launching 3 whiskeys in the super premium category, 2 in the first week of June, starting with Karnataka and quickly extending to Telangana and Andhra Pradesh thereafter. These product launches will be followed by a 3rd super premium whiskey brand after a gap of 3 months. These niche products and brands carry a strong differentiated value proposition to the consumer along with excellent packaging appeal. All these products, as I said, are sitting on top of the pyramid at a high price point, and these segments are highly profitable. Though there is a strong competition from established companies, we believe consumer choice is limited in these product categories, and therefore we at Unibev bring a unique selling proposition which will enable consumers to widen their choice, and hopefully we would offer a very, very effective alternative. I now request Dr. Bhaskar Roy to share the operational performance of the company.
Thank you, Mr. Rekhi. Good morning and warm welcome to everyone. I will share the operational performance of Globus Spirits Limited during the quarter ending March 31, 2018. During Q4 FY18, consumer revenues grew by 11%, while growth in manufacturing business stood at 8%. Contribution of consumer and manufacturing business came in at 41% and 59% respectively. IML volumes came in 3.04 million cases during the quarter, higher by 16% against the same period last year, led by robust volume growth of 18% in Rajasthan, combined with sales volumes in West Bengal, a market we entered just in end of FY16-17. Our IML market share in Rajasthan stood at 32% in a growing market. Bulk alcohol revenues dipped by 5% as we undertook a shutdown in Samalkha for reasons of operational maintenance and enhancement of utilities. Franchise IMFL volume stood at 1.04 million cases in Q4 FY18, 34% volume growth over the corresponding quarter of last year. Moving to other segments, it's reported a revenue growth of 20% in Q4, driven by higher realizations in our high potential value-added DDGS co-product combined with better CO2 recoveries. Benchmark to soya and uptick in soya prices translated into higher DDGS realizations. We continue to see soya prices holding up in the present quarter. Grain and ENA rates continue to remain steady in spite of the weakening of the molasses rates. Packing material and transport costs are expected to get costlier as crude oil become more expensive and rupee continue to depreciate. With this, I would like to call upon our CFO, Mr. Ajay Goyal, to continue the discussions on the financial performance.
Thank you, Dr. Roy. Good morning, everyone. I will take you through the key financial highlights for the quarter ended March 31st, 2018. For Q4, financial year 18, gross revenues stood at rupees 4767 million, higher by 70% year-on-year. EBITDA came in at rupees 186 million, growth of 77% over last year's Q4. EBITDA margins increased by 310 basis points to 8.1%. We believe that changing product mix in favor of IMIL will drive margin improvement going forward. Profit after tax during the quarter stood at rupees 14 million compared to rupees 24 million in Q4 FY17. Moving to product line-wise performance, in Q4 FY18, we sold 3.04 million cases of IMIIL with an average net realization of rupees 306 per case. In franchisee IMFL business, the aggregate volumes for the quarter was 1.04 million cases. Out of this, 0.28 million cases pertain to bottling done by ABD in Rajasthan, 0.39 million cases for bottling done for USL in Haryana, and the remaining 0.37 million cases for bottling done for USL in West Bengal. Our bulk alcohol business volume stood at 15.5 million bulk liters compared to 16.2 million bulk liters in Q4 FY17. The total revenues from manufacturing stood at rupees 1365 million in the quarter, while the revenue from consumer business stood at rupees 929 million. The total outstanding debt as on March 31st, 2018 stood at rupees 2415 billion. This concludes my remarks on the financial highlights. I would now request the moderator to open the forum for questions. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Participants who wish to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Avnish Roy from Edelweiss. Please go ahead.
Sir, thanks. My first question is on the ENA from Bihar in terms of supply. What else is left in terms of process, any more approvals? And second, in terms of economics, how does it work? Because clearly there is a lot of taxation when it moves from one state to other or even exported. So how profitable can the export be? Or how profitable can this business be?
I'll touch upon the economics while Dr. Roy can tell a little bit about the procedures that are winning. We are, considering that the factory is located in an area where raw material costs are substantially lower, we are expecting that our overall contribution on ENA will stay steady even after start of Bihar, if not improve marginally. In addition, as and when ethanol is supplied for fuel blending, we believe the margins will increase further.
Necessary permissions, etc., have already been received from the authorities. We are now planning for recruiting staffs, etc., because it was closed for 1 year, and all the departments, etc., are to be again recruited. And the necessary work to restart and revamping the different machines are required. So I feel that within short time, we can start the activity and production over there.
So no more government approval is needed, just your own hiring?
Yeah, no more government approval is required.
And second question is on Lafayette. So if you could give us some details, I know it's very early days, but why you have chosen brandy and why Puducherry, if you could answer that. And similarly, why go for next expansion in the super premium whiskey now? Why not in the slightly lower end, which is much larger part of the market? Why go into super premium and not just in the premium part of whiskey?
I'll request Mr. Rekhi to take that on, please.
Yeah, so the strategy is very clearly that we will first start with the southern markets, and southern markets have got two salient points. Brandy is very important in the southern region, particularly in Pondicherry, where we have first launched it. It is equally relevant in Karnataka, Telangana, and Andhra, where we are going to roll out the brandy, along with the two whiskeys immediately and the third one to follow. The second part of your question, why we have chosen the super premium category, simply because the product contributions the super premium product categories are the best in the industry. They are the highest in the industry. I will give you just equivalence factor. If you sell approximately 10 to 15 cases of the regular IMFL, that equals to the product contribution of one super premium whiskey category. This is roughly the equivalence in terms of product contributions, and therefore the working capital is much more efficiently deployed, even though the volumes are relatively small. Overall, the industry figures estimated are 14% of the super premium category products in IMFL segment yield about 45 to 47% of product contributions in the industry, and therefore our strategy is well placed within the context of macroeconomics for the industry.
So that's quite helpful. Because this is super premium, could you talk about how you're going in terms of distribution and in terms of brand? So will it be very targeted distribution?
Yes. Now, we have to be selective. We have to be discerning. We know the turf very well as to which outlets are going to give us the best throughput. And we would be having a differentiated and cherry picking in terms of distribution outlets so that we get greatest velocity of the brands and therefore repeat purchases.
And so lastly, you have done around 10% revenue growth, net revenue growth this quarter, and your consumption of raw material is absolutely flat. So if you could talk about how the volumes have been, and in terms of the raw material scenario, what's the outlook?
Sure, I'll take that. So raw material prices, I think there was some misunderstanding, have not been flat, but they've been steady as per expectation. And raw material follows a seasonal, mainly grain, follows a seasonal pattern. And we've seen that over the last 2 or 3 years, grain has more or less been following that pattern. And if there's, and basis that pattern, we've also been able to pass on price increases to customers. Going forward, there is going to be firming up of, as per that pattern, is expected to be firming up of grain prices towards the end of Q1 and through Q2. Q3 and Q4 is usually when the grain prices start coming off a little bit. As Dr. Roy mentioned in his opening remarks, there is firming up of some packing material prices, especially PET, that is expected in this year.
It will be the glass prices, right?
PET bottles, plastic bottles.
And if you could talk about in terms of numbers, when you say firming up, how much you expect in terms of numbers, inflation? And second, because molasses-based ENA has crashed, are you looking at some mix change from grain-based to molasses-based?
So molasses ENA has not crashed. Molasses has crashed. Molasses ENA remains firm at its level of between 35 and 37 rupees a liter, which is essentially guided by the fuel ethanol price. Fuel ethanol rates are approximately 39 rupees for a 99% strength product, and that roughly translates to 35, 36 rupees for a 96% product. Going forward, our business will remain grain only, considering that it is a USP of our IMIL products that we make from grain-based ENA. Our customers have demand for grain ENA. They do not shift between molasses ENA and grain ENA. And finally, in the states that we operate, molasses is not available. So we have to make do with the raw materials that is available in the state.
So one clarification, molasses-based ENA is flat on a YY basis?
It has come down a bit, but not to the extent that molasses has.
Okay, sir. Thanks. This is all from my side.
Thank you. The next question is from Rahul Jagwani from SKS Capital. Please go ahead.
Yeah, hi. So my first question is regarding the Bihar factory. I mean, any indication of what can the peak revenue and EBITDA be from that?
So, we are in the process of doing all of that working, but our average ENA rates for the last year are to the tune of between 40 and 42 rupees. I think it's around 41 point something. We assume that ENA rate, but of course there are certain value-added products as well, which are about 15 to 20% on top of the ENA revenue. There'll be a capacity of about 80,000 liters per day. We run the facility for about 340 days. So if one was to run it for 12 months, then, that is the kind of revenue that one can expect. But as of now, we are not, as I said, we are working out the economics of it, and we're not in a position to commit any startup date. So it's difficult for me to say how much revenue EBITDA will come in this year from Bihar.
Okay. And will there be any additional costs, any other additional major costs, for starting?
Do you mean capital cost or operational?
Yeah, capital cost, any other?
Not major. There will be some capex required to produce ethanol for oil. But as of now, the plan is to make ENA.
Okay. And any indication of when you think it will fully ramp up? Once you started, how long will it take to fully ramp up?
Not long. As is testament from our work in West Bengal, last year we ran it above 90% capacity utilization on an average through the year. So, these facilities can scale up very quickly.
Okay. And can you just help me with the current, the current gross and net debt and the capex for the next 2 years?
Yes, the CFO will take that, please.
CapEx for the current
gross and net debt and capex for the current year.
For next 2 years capex?
For the next 2 years, yeah.
Do you have that?
So our maintenance capex is to the tune of 10 to 15 crores per year, and that is what is scheduled. There is no project that is planned which will be significant in nature. Our debt as on March 2018 is around 240 to 250 crores.
Okay. And what will be the tax rate? Because FY18 was about 39%, so what will be the tax rate going ahead? Will it be...
Tax rate, basically, we are still under the MAT. Okay. MAT tax of around 12%.
Okay, thanks.
Thank you. Next question is from Binoy Jariwala from Sunidhi Securities. Please go ahead.
Hi, thank you for the opportunity. Sorry, I could not get the tax rate figure. Could you help me on that once again?
It's MAT, 21%.
MAT, okay. 39 Okay. On the Bihar facility, could you help me what is the interest and depreciation amount in FY18?
See, we have taken a loan of somewhere around 150 crore rupees for Bengal and Bihar. And if we allocate almost similar amount, 75, then you can say roughly 7.5 crore rupees interest in the facility of Bihar. And depreciation is somewhere around 4 crore rupees.
Depreciation is 4 crores?
Yeah.
Now on the premium IMFL business, we talked about our plans for the coming year and, did share a roadmap on the new launches coming up over the next 3 to 6 months. Could you help me with a broader roadmap, let's say a 3-year roadmap? What kind of investments are we looking at? What kind of distribution reach, coverage we can look at? Which all categories would we be present in? within
I think this is a very good question, and there will be expecting basis a strong performance, assuming a strong performance at Unibev, significant value creation for shareholders. However, I would like to caution over here that we are at concept stage, and currently we are not in a position to give projections for a longer period of time. I think it is imperative that we provide time to the Unibev team to seed their brands into the market before further projections are given. The other thing is that from a Globus investment point of view, it's going to be based on free cash that the company generates year on year. So it's going to be a combination of performance of brands as well as free cash availability for funding duty and receivables in Unibev.
So does it mean that all of the investments that will go into scaling up Unibev will happen only from the internal free cash growth?
That is the current structure that is planned. However, we are, like I said, early days, seeding the market. The plan is to grow the business from free cash flows at Globus. At some point, there is also potential of taking on debt financing, especially for the duty funding portion of the business. So, early days, we are going to equip Unibev with as much war chest as is possible, but a lot of it will happen once there is proof of concept.
Absolutely. Any numbers that you can help with?
At this stage, it will be difficult for us to give projections, but maybe later on in this year, we shall be in a better position.
Okay. Thank you so much. That's it from my end.
Thank you. The next question is from the line of Devesh Vakaria, who's an individual investor. Please go ahead.
Yes, sir. About the Bihar facility, you said 80,000 liters per day. Am I correct?
Correct.
Okay, that's it. Thanks a lot.
Thank you. Next question is from Yash Agarwal from Crest Capital. Please go ahead.
Hello.
Hi, good morning.
Hello. So is there a date, that you have in mind for the Bihar facility when you're going to start,
It's going to be sometime this year. As of now, we don't have a date that we've set.
This calendar year?
This financial year, but let's hope it will be this calendar year. Yeah.
Secondly, sir, I wanted to know in the IMFL, so currently we have one brand, Lafayette, which is launched, right?
Yes.
And it's across how many states is it? Geographies is it? Pondicherry and?
Mr. Rekhi, would you like to provide some insight, please?
Yeah, like Mr. Sarup said, at the moment, we are going to be launching brandy across Pondicherry, which is already launched, Karnataka, and Telangana and Andhra Pradesh, along with 2 whiskies, which are going to be launched from first week of June, and a 3rd super premium whiskey to be followed in the next 3 months. This is stage 1 of the operations, and once the proof of concept is established, then we would be moving on to other selected states. And the states are being selected by us, keeping in mind various factors, but particularly with regard to product profitability and contributions in different states.
So, a question on the IMIL business. So, Rajasthan has taken a 31 rupee hike, as you said. So, we do 10 million cases there, which is roughly about 1 crore. So, we would expect that almost all of that would fall into the operating profits. Is that a right understanding?
Well, you are right about the price increase, and you're right about the volume last year. This year, like I said, there will be some pressures on packing material. We are trying to work on ways to offset that by reduction in cost elsewhere. But, the year's just begun, and, the macroeconomic position in the country is a little volatile currently. So it will be difficult for me to give a projection on how much of that will come into the bottom line. As you're aware, we are not able to pass on cost increases during the course of the year. So, effort is on to take as much of that as possible to the bottom line.
And outlook on the volume growth. So Rajasthan, West Bengal and Haryana, what sort of volume growth in IMIL, can we do?
We've demonstrated about an 18% volume growth last year, largely on the back of Rajasthan. Rajasthan volume, Rajasthan market share is now at over 32%. And there is one other player with over 30% market share over there. So is Rajasthan, sustaining Rajasthan growth at those levels will not be as easy as, last year. The majority of the growth will have to come in from West Bengal and Haryana, but those are small bases as compared to Rajasthan. So we have to see whether, even a large growth there will move the overall needle too much. So I think it's fair to assume, around a 15% kind of growth rate in country liquor this year.
So across all geographies, you're saying a 15% volume?
Yes, overall.
And so how's the situation in Haryana right now in terms of competitive scenario, the intensity, etc.?
More or less status quo. The consumption of IMIL has degrown over there. The recorded volumes have degrown over there. And we are hopeful that this year we might start seeing some changes.
And so have you seen any reduction in our interest cost? Because our debt is coming down. I think it's down by 10-15 odd crores this year also. So will we see a reduction in interest cost this year?
Yeah, overall debt burden is coming down, but if you see the interest rates per se, it is now a little bit going up, almost by 20 basis points. So, but anticipating we are low interest cost in the coming financial year.
Okay. Thank you, sir.
Thank you. Next question is from Navneet Bhaya, who's an individual investor. Please go ahead.
Okay, hi. I want to check, vis-a-vis Q3, there has been a volume decline as well as a realization decline of your IMIL segment. So what was the reason for that?
I'm sorry, I missed the question. Could you please repeat?
As compared to Q3 of FY18, there is a decline in the volumes of IMIL as well as realization.
Yes.
So, any particular reason for that?
Largely, it's Haryana. Our volume in Rajasthan grew. So, Rajasthan realization is a little bit lower than Haryana due to the price structure in the two states. So, that is a reason for decrease in the realization. The volumes degrew largely because of a degrowth in Haryana.
Okay, and continuing with, the previous person's question, Haryana, there's been a significant decline in the volume. So, could you speak a bit more about, how do you see Haryana coming up in the next year? So, I've just done some numbers from your presentation. In Q3 FY17, I think you had done 0.96 million cases, which has come down to 0.46 now. So, it's less than half.
Yeah.
So, any comments on that? How do you see it coming up in the next year?
Okay. So if you see the comparison of the market has come up. Our share is around 10%, 11%, which we are maintaining.
Mm-hmm.
But the market, overall market has fallen down. So the normal share has also, the total volume has also come down. This is the reason of fall.
What's your outlook on that?
We have, it will be steady. I think now slightly it is picking up. If the trend remains like that, then the volume will go up. We are expecting to some extent.
So the other thing I'd like to add on that is that over the last 2 years, since the competitive landscape has worsened, we've seen a sort of a seasonality in the industry, which wasn't there earlier. We found that Q1, Q2 sales, the recorded sales are much higher, and the following 2 quarters, the sales industry sort of shrinks. I think it is safe to assume that the overall market in Haryana will remain more or less the same as last year. Quarter on quarter, there may be changes due to that seasonality effect that I'm talking about. And our market share will remain around the 10 to 11% mark. That is our outlook on this market.
Okay, so you don't see it going down further from, Q4 levels?
No. And in fact, if you look at the last 8 quarters, you find that more or less the market share has been stable. However, due to seasonality in the recorded industry and due to an overall decrease in industry over the last 8 quarters, in spite of the seasonality, there has been reduction in volume. But we feel that it isn't probable for the market to shrink further from where it is currently.
Okay. Thank you. That's all from my side. Thank you.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. The next question is from Chanchal Khandelwal from Birla Mutual Fund. Please go ahead.
Hi, thanks for the call. Sorry, I joined late. I just wanted to have some clarification and understanding on the indirect tax. How does indirect tax work on ENA? And what if GST comes in? How will it impact you and the industry?
See, at present, the entire bouquet of our services, products like IMIL, IMFL, it is all out of the purview of GST. And on count of bulk alcohol, ethanol, and the GST is still not clear. I think some clarification is pending from the council side. Whatever information we are able to gather, the view is GST will not be applicable on the our alcohol product per se. So we don't see any impact on account of this GST part.
I'd like to add something to that. It was clarified earlier by the GST Council that status quo on ENA will remain, and what is defined as status quo is that there will be no taxation. However, what they are not clear on is that whether it will continue to remain as such. Overall, we have done a sensitivity internally, and we find that if this was to get implemented, if there was to be a GST on ENA, of course it depends on the rate, but let us assume it is the standard rate of 18%. We feel that there will be no significant impact on our P&L. The other aspect is that if this was to get implemented, we do see a dramatic increase in our franchise bottling business, which, if it was to come through, would attribute to significantly higher margins in that business than what we are earning today.
Sure. Just to go a little deeper here, so today, what's the structure today on ENA or bulk alcohol? How much, so different states have different tax. What's the structure of the taxation today? And when you said if GST of 18% come, it will not impact your P&L, can you explain how?
May I request that this discussion happen, because this will require a little bit of data to be shared with you. We are happy to have this discussion and provide you this clarity that we have. but may I request that we do it offline?
Sure.
Our IR team will get in touch.
We'll take it offline. Just quickly here, do you have some taxation on ENA, or today there is no, different states have different tax on ENA, right? Today,
there is VAT and CST.
Which you can set off with the taxes you pay in IMIL and MFL, right?
No, there's no set off and there is no tax, there's no GST, there's 0% GST on our raw materials.
Okay, I'll take this offline. And secondly, on the business of IMFL, the launches which is happening in Pondicherry and other places, can you help us understand the states or the places you have chosen to and the rationale behind those?
I'm sorry, could you please repeat your question?
Can you explain why Pondicherry, Andhra, Telangana and Karnataka have been chosen for whiskey and the launch of your IMFL category?
Sure. I'll request Mr. Rekhi to take that.
Yeah, simply it's based on two parameters. The salience of brandy, for example, is very high in Pondicherry, along with product contributions and the high point which we are sitting at in terms of pricing. So it gives us maximum contribution from brandy in Pondicherry. Likewise, the salience of brandy in the other three states planned is pretty significant. In Andhra, it is the highest of the three states, followed by Telangana and then Karnataka. Coming to whiskey, Pondicherry is not very important from the whiskey point of view, but Karnataka, Telangana and Andhra, volumes of whiskey are, the salience of whiskey in the industry and the consumption pattern is pretty high. And so are the product contributions. So, just to summarize, the strategy is based on what we can extract from deployment of capital in terms of maximum product contributions, and the product categories, that is the brandy and the whiskey being relevant.
Sure, that was useful, sir. Just quickly, when you say the premium segment on brandy and whiskey, what is the price point you're looking at?
Well, the highest point in that category is first, second and third highest points in case of whiskey, and the highest price point in our particular market. That is our cross-line pricing for the products.
What is the highest price point, sorry, if you can highlight?
Now, see, this then gets you into the maximum retail criteria as one, and or the billing of the distillery into a particular state. The prices in different states are different. So whatever is the cross-line product at the highest price point on a per case basis or the maximum retail pricing, that guides our launches and that guides our pricing.
Sure. Thanks, that was useful, and I'll take that question offline if someone can answer that. Thank you.
Thank you. The next question is from Sahil N, who's an individual investor. Please go ahead. Sahil, you may go ahead with the question. Your line is at talk mode. There seems to be no response from the line of Sahil. That was actually the last question in queue. As there are no further questions, I would like to hand the conference over to Mr. Santosh Patnaik for closing comments.
Thank you everyone for joining us on the call today. Hope we were able to answer all your questions. If you need any further clarifications or would you like to know more about the company, please feel free to contact us. Thank you.